back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront, and generate consistent returns year on year. So the first thing that we want to do is open up our brokerage platform. I'm using tastytrade, and we want to pull up an equities underlying, any equities underlying. Let's just go with NEO, why not? And at this point, we simply just want to pull up a list of expiration dates to choose from. And we want to lock in on an expiration date. So the expiration date that we're going to choose is going to be between 30 and 60 days out in time. And it also needs to be a monthly expiration, not a weekly or quarterly. So the only one that currently fits that criteria is January 17th, which is 53 days out in time. So we're going to take this information, 53 days, come over to our watch list. This is just a pre-made watch list. You can use any watch list that you'd like. And we're simply going to filter out any and all underlyings that have earnings over the next 53 days. Okay, and then we also want to filter out anything with a low liquidity rating level. The reason for this is because earnings will have a negative effect on our P&L. It will increase volatility or vega, and it will mess up our deltas. And having low liquidity in what we're trading will make it difficult to get in and out of positions. We'll be paying wide spreads, which is what we don't want. We want to be only paying tight spreads. So at this point, you'll be left with a watch list that looks something like this. I personally order everything from high to low IVR. That's just a matter of personal preference. I generally like to sell premium on underlyings that have an IVR of over 50 as opposed to below 50. We want to play the contraction when volatility is high. So at this point, we just want to simply go down the list and see what looks good and what will fit well in our portfolio. So right now, GLD is looking really nice. It's trading at just under $243 a share, an IV rank of 71.5, and it's got an absolute IV level of 17.6. So if you open up GLD and we come to January 17th, we're now presented with the options chain. At this point, we simply want to sell one call and one put, and we want to sell the call and put anywhere between a 15 and 20 delta. So if we just go to the 20 delta on the call side and then we go to a 20 delta on the put side, we've essentially now created a range for ourselves between 232 and 258. And as it currently stands, the numbers for this position is as follows. So we've got a max profit, or the premium that we collect up front is going to be $338, and our broker is going to require just under $5,000 in buying power. So a less than normal, dare I say the word normal, but less than normal compared to what we've been looking at previously in previous positions, less than normal return on capital. However, it is GLD, so I think you would be fine overall on this position. We've got a probability of profit of 70%, and if we were to be out of this position at 50% of max profit, we've got an 86% chance of hitting that target at some point over the next 53 days. So very, very high probabilities of success here that we are working with. And I completely understand if this amount of buying power is too high. I'm going to show you now how you can reduce the buying power requirement and increase the return on capital as well. So what we want to do is simply buy another contract to cover our short contract. So let's just say $5 wide. So $1, $2, $3, $4, $5 on the call side. $1, $2, $3, $4, $5 on the put side. And now we've created a $5 range on either side. The amount of premium we collect has been reduced, but the amount of buying power has significantly been reduced. So the buying power is now based on what the max loss is, because it's now defined, it's no longer undefined. So our max loss is going to be the difference between the short and long contracts minus the premium that we collect up front. That's how we end up with this. Remember, there is a contract multiplier of 100 on all equities. So that's why this is 1.38 and that's 138. So that's how you can increase your return on capital. Your probability of success will suffer slightly because you collect less premium, so your break-even points are not as wide. However, you have a much higher return on capital. So with that being said, how do you know how much buying power you should be allocating to your positions? Well, we've got a position sizing template that's free for everyone to use and get a copy of. Link is in the description. Just click on free position sizing template and we'll get that over to you. The way it works is you enter in the size of your portfolio at the top, and then you enter in what the current VIX level is below, and then everything below that will then be automatically calculated for you. So at this point, all you need to do is simply use this information to form the backbone of your portfolio, and you'll be absolutely fine over the long term. If you want to learn in more detail, again, link in description. This time click on EDS Premium, get yourself signed up. Inside you will have access to our portfolios, where you'll be able to see all the positions that we're placing live, all the adjustments that we're making. You'll be able to see how we're managing risk all in real time. There is also a full course inside, so no prior knowledge is required. We will teach you absolutely everything that you need to know from start to finish. And if you get stuck, you can ask questions with other like-minded individuals, and you can speak directly to myself. It is a private community, and there is a 100% money back guarantee. So after 6 months, if you have studied the full course and followed our trades, and at that point, if you haven't seen results or you're not profitable, then we will work with you for free until you do, or until you are profitable. Or you can request a full refund. So it's completely risk-free on your part. Right now, it is £1 a month to join. The price will be increasing once you're in. The price is locked in for you for life. So you are rewarded for getting in early. And with that being said, I will see you guys on the inside.